Well, talking about the 2023 budget, financing, the issue of debt, and the macroeconomy in Nigeria. The World Bank has projected that the Nigerian economy is estimated to grow by 3.1% in 2022 and to grow by 2.9%. That's less than what is projected for this year. For next year, 2023. They've also said that the outlook remains highly uncertain. The institution has warned about a potential fiscal time bomb, that's what they call it, except urgent reforms to fix the government's ailing finances are implemented. The World Bank, in its latest Nigeria Development Update, outlines measures that the country needs to take to defuse that time bomb they talked about, and that includes petrol subsidy removal, restructuring of the debts, and some of the central bank's moves. But we have the country director of World Bank now joining us to help us elaborate on that report that they shared last week and some of the way forward. The country director for Nigeria from the World Bank is Mr. Shubham Chowdhury, joining us from our Abuja studio. Good morning, Mr. Chowdhury. Thank you so much for your time this morning.
Good morning, Ine. Thank you for having me.
Great. So just before we delve into the details of that report that you have already shared, we're interested to know, we hear, especially African countries, just yesterday, I think Kenya got from IMF, what is the interest rate for loans when they're given to African countries? And then what is the interest rate for the developed economies?
So to get a full sense of this, I think first, the World Bank prices our financing based on the income levels of countries. So it's not Africa per se, it's really what is the income level. So within Africa, South Africa would have a higher rate than, say, Nigeria. The two main windows are what we call the International Development Association, IDA window, which is concessional financing, which Nigeria is eligible for. And then there's the window is the IBRD, International Bank for Reconstruction and Development, which is primarily meant for middle-income countries. But actually, Nigeria also qualifies for that because Nigeria is a lower middle-income country and has access to commercial debt. So the concessional window, which is primarily what Nigeria's financing is coming from, right now is about loans with about 38-year terms, 6-year grace period, and somewhere between around 32 years repayment period. And the interest rate right now, I believe, these are updated every quarter, is about 2.7% per year. Now, so those are obviously highly concessional relative to, say, and these are US dollar denominated loans. It's also possible to get it in other currency, but Nigeria has historically chosen to access in terms of dollars. Now, I want to emphasize that, look, all of this is kind of standard. It's agreed by our shareholders. It does not differ from country to country, except for this basic income level criteria. And it does not differ from particular credit to credit, right? And it's all on our websites. Either you can go to the International Development Association website, or you can go to the World Bank website and go to the Treasury page. So, there's full disclosure, and then the terms are really standard terms, and they're revised from time to time based on how markets move, but otherwise they're not project specific.
The perception that these financial institutions, majorly World Bank and IMF, that you seem to be helping a country, especially developing countries, but the conditions you give doesn't really make it look like real help.
So look, I've been asked this question many times, especially in the last few weeks. I'm not quite sure why. I think it's because we've been talking about petrol subsidies. But let me just put it to you this way. Over the last 3 years, or actually last 2.5 years, our board has committed financing of over $9.2 billion that is available to Nigeria. And all of that financing is for things like primary health care, energy access for rural households, for basic education, for keeping adolescent girls in school, for helping to rehabilitate rural roads. So, and actually, even to help with the rollout of the national identity number, the NINs, across the nation in a this digital ID in a robust way. All of those, our policies apply, but those policies are ones that I think all Nigerians would want us to apply, which is that the funds should be used for the purposes that they were intended in a way that benefits the Nigerian people. So we have fiduciary rules and policies. We have rules about procurement, which make sure that the procurements are transparent, are competitive. And we have rules about environmental and safeguards policies to make sure that in the process of implementing these programs, these are government programs that we happen to be financing, that ordinary citizens, communities are not hurt by them. So you could call them conditions. I see them as things that ordinary Nigerians would want us to hold government to account for. Now, there's a separate set of things, which is when we talk about PMS, petroleum subsidy removal, why that's necessary. Actually, this hasn't been a condition so far. This is just part of our advice. I mean, we're here to support Nigeria. And the way I put it, things like primary healthcare, basic education, we're happy to help. But really, these funds should be coming from the Nigerian government themselves. To the extent possible, Nigeria should not have to get debt financing from outside the country, even if it's concessional, if it has the resources within the country to finance these basic services. And that's the point about PMS. Right now, PMS removal or phase out is not linked to any financing. None of the $9.2 billion that I mentioned is linked to conditionality, except for the kinds of things that I talked about, which is making sure that those funds are used for the purposes they were intended.
Yeah, actually, I was thinking of the condition of, sometimes asking countries to devalue their currency, to be able to access some of those facilities. Was conditioned like that. I was thinking about the petrol subsidy. I think we'll get to that. But sometimes countries are being given this kind of a condition, which a lot of people think it will, inadvertently harm the economy. Even though it seems they are receiving assistance from the financial institution.
So on this one, let me be clear. The kinds of things that I've mentioned, the $9.2 billion that our board has committed, I've just described what those are for, what they're meant to be used for, and what kinds of, I call them policies or mutual accountability terms that are linked to those. I hope that you and your audience and your viewers and ordinary people would agree that we should have those kinds of accountability built into our financing, so that we can both reassure the Nigerian people who say, oh, you're just adding to Nigeria's debt, and also our shareholders, Nigeria as a shareholder, that look, these funds, these concessional funds that are coming from taxpayers all over the world and from recycling the World Bank's own resources, that these are being spent for the kinds of things that we think will help Nigeria eliminate poverty and help make lives better for all its citizens. Now, there's a separate type of financing, which is often associated with IMF, or in our case, with what we call development policy financing, which is, it's untied, meaning the government can use those funds in any way it chooses. And it's there that often you hear this talk that, look, if we're going to be providing untied financing for the government's budget, then we would like to make sure that the government itself, that Nigeria itself is doing all it can to help itself. So, for example, if we were going to be providing untied financing, meaning it's not linked to any particular use like keeping adolescent girls in school, then we would say to the government, look, we are happy to help, but you can help yourselves as well by phasing out PMS subsidies and using, it's going to be 5 trillion or 6 trillion naira this year, to use those funds towards financing adolescent girls, keeping them in school, towards, providing a basic safety net for all of Nigeria's citizens. So that's where often you will hear this talk about policies being linked to untied financing. At the moment, anything you've heard me say or our team say about PMS subsidies, these are honestly just suggestions. We would like to have a conversation. And certainly the choice is not going to be ours at the end. It's going to be Nigeria's choice, certainly the political leaders, but in some sense, all stakeholders, including ordinary citizens, have to agree that this makes sense.
True word, Mr. Chaudhry. But it's also important for you to know that it's not just you, the World Bank, that is advising Nigeria to take off the subsidy. A lot of Nigerians have looked at the reality and the fact that funding the subsidy is a heavy burden on the country, and it's also affecting our debt servicing, which has gone beyond the revenue now. But from your expert eyes and your findings, because the truth is, the government is aware that the subsidy should be removed, but the social impacts, what it would do to transportation, what it would do to prices of food, what it would do to inflation, I mean, has been a hurdle or a discouraging factor, you know, to the implementation of the removal of the subsidy. So if you were to advise now, how do you see that aspect being, that's the spillover effect of removal of subsidy, how do you see it being handled so the harshness or the hardship is not too much on the people?
Now, look, you're absolutely right. Taking a major move like this, where, you know, for years, for decades, the price of something has been subsidized, you know, and then to say we have to remove the subsidy now has to be thought through. There has to be a conversation about how ordinary Nigerians can be best protected, or at least the kind of the costs of this can be cushioned, that they can be cushioned from the costs of this. But let me just point out that in some sense, already ordinary Nigerians are facing the cost of this. I don't know too many people who are able to get access to PMS at the 175 naira per liter or whatever the latest regulated price is. Most people I talk to, including, frankly, drivers in our office, you know, who don't have the time to stand in queue for, you know, 8 hours sometimes waiting to get PMS at 175 naira, they're having to go out and they're paying 280, even 300 naira per liter. So let's just recognize that some of the costs of having this subsidy in place are already being borne by ordinary Nigerians, okay? But having said that, I do agree, we all agree, and including, you know, as you said, there seems to be a sort of a consensus that Nigeria cannot sustain PMS subsidies, but, you know, we have to think through how can poor and ordinary Nigerians be cushioned from the effect of removing these subsidies. In other countries, there have been solutions like offering targeted cash transfers, say to the bottom half of the population, over a period of time to help them cope with the fact that there might be a spike in inflation in the cost of various things as PMS is phased out. Do keep in mind, though, that a lot of the impact of rising oil prices has already been felt by the economy, a lot of the rising inflation. Diesel is not subsidized or regulated in any way, and you know diesel is responsible for much of the transport costs. Kerosene, which is the fuel of the poor, kerosene is not subsidized in Nigeria. So, and the price of kerosene has gone up. So already that has been felt by many Nigerians. So PMS is the one thing that has been subsidized. It happens to benefit mostly rich Nigerians, and frankly, it mostly benefits those who are able to take advantage of arbitrage opportunities and, you know, smuggle the product across the border. But right now, if you raise the price of PMS, the cost of living for ordinary Nigerians is likely to go up. We don't think it'll go up as much as some people fear, but to anticipate that, we're encouraging a conversation about how, you know, ordinary Nigerians can be cushioned against that. Maybe there are ways of, as I said, rolling out cash transfers that get directly to Nigerians, ordinary Nigerians. There might be some ways of ensuring that the cost of public transport doesn't go up. And I think the most important part of the conversation has to be to restore the faith of ordinary people that, look, that 6 trillion naira that is no longer going to go towards PMS subsidies will be used in a way that directly benefits them. So whether making sure that primary healthcare facilities have medicine, or that schools have textbooks, or that rural roads are maintained, right? So the benefit will come in other ways as well, but that too needs a conversation between the political leaders and the population at large. You're absolutely right that it seems like all parties or most people have agreed here in Nigeria that something needs to be done. And all we're saying is saying, look, we agree, let's start the conversation.
All right, just before we let you go, Mr. Chaudhary, and this is really important because it's like the biggest elephant in the room here in Nigeria, the issue of exchange rates. And we do know that a high level of the inflation Nigerian economy is facing is imported because Nigeria is very import dependent. And so because of the exchange rate, that is a problem. How does the World Bank envisage this issue being solved? The fact that there's supply issue, that's on the one hand, and then the multiple exchange rates, you know, in the country, that has also contributed. What is a possible way out?
Okay, so let me say 3 things on this. First, just to recognize it is a tough problem because anytime you have an imbalance between demand and supply, you know, so you're going to have to manage that imbalance, right? So right now there is excess demand for foreign currency and there's not enough supply of foreign currency coming in. The fact that with oil prices being that high, the supply of foreign currency coming in has not, you know, kind of kept up is worrying, and it's something to think about. Now, how does one usually reconcile, you know, mismatch between demand and supply? You let the price of the thing that's scarce, in this case, foreign currency, you let the price of that rise, okay? So that would be like allowing the naira to depreciate. Now, there are all kinds of reasons why you don't want that depreciation to be very large or sudden. So that we understand. What I think what we've been saying, including to the CBN, obviously, and publicly, is that, look, we're not saying let the naira be completely at the mercy of market forces, but we are saying that there has to be some way of recognizing and responding to the market imbalance that's there. It's kind of like a pressure cooker. You know, pressure cookers have release valves, you know, so that the pressure doesn't build up. That's what we are primarily saying. Allow some price discovery in the INE window, which is the investors and exporters window, which is supposed to be the main vehicle where currency gets traded. Allow some, you know, willing buyer, willing seller price discovery. You know, how much are, you know, people who need US dollars willing to pay for it? Unless that happens, you see all of the pressure building up in the parallel market, which is what has happened. You know what the parallel market rate is right now, somewhere upwards of 750 or 760 naira per dollar, whereas the official rate is still somewhere around 440 or 450. I forget exactly what. And that pressure, in a sense, is the kind of pressure that builds up inside a pressure cooker. So our contention is, if you allow some price discovery in the INE window, that will have 2 impacts. It will kind of reduce some of the pressure in the parallel market. It will actually encourage people to supply FX to the INE window, which now you will know most firms and certainly individuals are hesitant to do. And third, it will actually help with inflation. Because if you look at what's happened to inflation, especially take a look at the period in 2016 and 2017, inflation went up and basically tracked the parallel market rate. Because most businesses, somehow, if they need dollars, they have to go and get the dollars in the parallel market rate. So the fact that the official exchange rate has been kept stable has not actually helped keep inflation down. So that's essentially what we've been saying for a while. But I do understand that it's something that, you know, everyone's worried that, look, if we let the kind of official exchange rate start to depreciate, it opens up a whole can of worms. And we're saying, look, so put in some measures to keep that depreciation from being too sudden or too sharp, but allow some price discovery, let some of the pressure off.
All right, thank you so much. Really getting into the next segment. Thank you so much, Country Director with World Bank, Mr. Shubham Chaudhary, for your time this morning. We do hope we'll be able to get audience with you anytime soon, to clarify some of those other issues that we have.
I'm here in Abuja, so whenever.
All right, okay, that's great. All right, that was building on the report of the World Bank on Nigeria and the economy, especially as elections are getting really close. We hope to get him back, especially to talk about the impact of the election. Now, let's take a short break. When we are back, it's AFEX time.